Kenyan-based private equity firm Catalyst says it's acquired a 50% stake in Ethiopian food and drink maker Yes Brands. That's to tap into the Horn of Africa's fast economic growth story. So for more on this, we're joined on the line by Paul Kavuma, CEO of Catalyst Principal Partners. Paul, thanks very much for joining us. So of course, Catalyst has made some acquisitions in Tanzania already, Chai Bora and Chemi Cotex Industries. So this, of course, is your first foray into the Ethiopian market. Give us an indication of what investment case and what kind of story you're building up about the potential around Yes Brands. Paul, hoping you can hear us there. So I suppose the first question I was hoping to kick off with was just around the Yes Brands. It's a leading bottled mineral water company in Ethiopia. Just wanted to know the investment case as you saw it when putting your money into the company.
Yeah, sure. Well, Yes Water is the leading water business here in Ethiopia. It really only started less than 4 years ago, but has grown exponentially on the back of a high-quality product and packaging proposition, and as well as a strong branding and recognition amongst, particularly around key accounts, all the main hotels, restaurants, etc., all carry the brand as the preferred water brand in the country. So that has stimulated growth in the sort of 50-60% growth rate year on year, with us injecting additional capital to support that growth going forward.
So what do you plan to do with the company? Is it a case of just continuing to grow in its presence in Ethiopia, or are you looking outside of the borders of the country?
Well, both. I mean, clearly Ethiopia is a huge market. It's got 90 million people in the country, and I would say we've only scratched the surface in terms of getting penetration, first within the main cities, but then across the rural communities. But the company has already benefited from exports into some of the neighboring countries, and we expect to continue to grow the export volumes aggressively across the 3 to 5 year cycle.
I mean, it's an interesting acquisition for a private equity company, Paul, if you're talking about bottled water in Africa. But I suppose if you think about it rationally, given your concerns around quality of water, there's, of course, demand for bottled water. I mean, talk to us about your views on the kind of projections when it comes to demand for bottled water in Ethiopia and outside of the country.
Yeah, I mean, I think, clearly bottled water and the need for good is not just a beverage issue. If you look across the consumer goods space, we've got a growing consumer demand requirement by an increasingly wealthy population. The economy is growing rapidly, so disposable incomes are increasing, and so the need for convenient, affordable, accessible products is a universal theme. The second theme is that the country, because it is coming from a young economy at the moment, there's very limited local manufacturing. So a lot of goods are imported. So the combination of import substitution with locally manufactured high-quality products, which can be made so that they're affordable to the majority of the people in Ethiopia, is a thesis that underpins our investment. But we are not just interested in bottled water. We will be expanding the portfolio of products that the business offers over the coming year or beyond to broaden it into a food and beverage business across the next 5 years.
Very quickly, Paul, I know you haven't disclosed the amount, but given the fact that there are a lot of questions around multiples for private equity buyouts globally right now, I mean, can you give us an indication of what type of multiple you bought the company on?
Yeah, well, it was in the sub 6 EBITDA multiple, which for us would be consistent with the high growth trajectory of the business. If you look at a forward multiple, those figures come in very quickly.